And all that is what American Homes for Rent is banking on. One of the largest single-family landlords in the country, it's now building its own communities.
It's a good world. Good world going bad.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and we've had, listen to me, a 300% increase in build to rent SFR communities since 2019. You guys, we're going to go into all of this data, and then we're going to talk about how not to be an American that's stuck renting for the rest of their life. I'm going to tell you guys right now, when I read this data, when I read this article about how many areas actually are building rent-to-owns, guys, absolutely blew my mind. I mean, things are so insane right now. I hope it's going to blow up on everyone's faces. But the thing here is, and I want to start by saying this, you don't have to feel bad if you're renting. It's not that, you don't have to rent forever if you're purchasing a house right now. The media and the industry wants us to think that if we don't purchase a house right now, that we're going to rent forever. But that's not true at all. What we should really be doing is, if we are renting right now, or we can't afford a house or whatever's going on, make a 2-year plan to rent. Make a 2 to 3 year plan to rent, and understand that what really matters if you're renting, don't listen to these bums. Don't listen to these bulls. Don't listen to these guys, okay? Huge egos. All they can see is themselves. They only care about themselves, you guys, and making money. All you got to do, you make a plan, 2 to 3 years, and you rent with a purpose. And by purpose, what I mean is credit, income, assets, understand your market, understand comps, understand value, understand recession. You have time. You should consider yourself blessed that you're not someone that purchased a house with buyer's remorse. Now, what we'll do today, we're going to go into a few videos, and I'm going to show you guys insane data points, but we'll start with the video so I can show you guys what's been going on for the last few years.
American Homes for Rent is banking on. One of the largest single-family landlords in the country, it's now building its own communities, more than 100 in just the past 5 years, with 5,500 homes in 16 markets.
This generation of individuals has all their life events later in life. They are getting married later, they're having their children later, and they're acquiring homes later, meaning there's a longer time period that they're renting, hence the need for more high-quality rentals.
With the housing market now both pricey and lean, big landlords as well as home builders like Lennar, D.R. Horton, and Toll Brothers are getting into the build-for-rent game. There were 13,000 new single-family homes started as rentals in the first quarter of this year, a nearly 63% jump from the same time last year.
This country is undersupplied in rentals.
Single-family rentals grew dramatically after the Great Recession, when millions of homes went into foreclosure and investors bought them. The supply is now starting to come down as some smaller landlords sell at top prices. But demand is still high. American Homes reports about 98% occupancy as the pandemic reshuffling continues.
Greed, fraud, corruption, and the Fed has destroyed the housing market for the average American. 98% occupied. Now, my biggest worry, and why these investors and these rich people belittle us all the time, is many renters don't care about becoming owners. They want a lifestyle that they're comfortable with, and they want to go on through life doing their own thing, which is fine. You could still have a happy life renting. But I believe that as Americans, that each of us should own a house, and that each of us should be purchasing a house at a time that's not horribly risky and toxic, which is what's happening right now. But my point in all of this is, if you're renting, you must have a plan. So they're saying that everything is starting later for adults. So what I say is start sooner on becoming a great homeowner, especially if you're young and you're listening to me. Start sooner, not later. Start now, because you have the warnings, you see what everyone else is doing, and the people that are the most disciplined generally have the happiest lives and are the most successful. Either way, you guys got to look at this article, okay? This just came out today. So the day of this recording, this came out. This is titled, "The Build-to-Rent Housing Market Has Grown More Than 300% Since 2019. Insane. In 2023, there were a record-breaking 27,495 build-to-rent homes completed in just one quarter. My gosh. These 20 housing markets saw the biggest increases. Now, before I get into that, I want to show you this graph right here. I'm probably going to post this on X Twitter. Now, this is very interesting, guys. This is the number of build-to-rent U.S. homes completed each year. Now, this is going back to 2014. So if you look at 2014 to right now, that's a what? Almost a, what, 5-time come up? That's what? That's actually a 6-time come up right there. That's almost a 7-time come up from 2014 to 2023. But what's really astounding here is look at the increase just from 2022 to 2023. These guys want us to rent so that they can keep the asset, which is why I'm saying focus on you, focus on your market, have a 2-year plan to rent, maybe a 3-year plan to rent as everything gets balanced. We enter recession, we get through the presidential election because, and if you don't believe me, what I'm saying, look at the buyer's remorse surveys. Look at the buyer's remorse surveys. We don't have to, you don't have to listen to me. You don't have to listen to these bulls, but please, listen to the people that just bought. But either way, you guys, this is out of freaking control. Look at that. 2,495. Insane. I wonder what it's going to be this year in 2024. Now, this next data set, guys, this is really surprising to me. These are 20 metro area housing markets with the most build to rent home completions in 2023. The number one market. Really surprised to see Phoenix on there. Really surprised to see that. And honestly, you know, I can't believe Phoenix is on here. But Phoenix is leading the, I thought it would be Texas as well. Phoenix is leading the way at number 1. They had 4,000 homes completed to be rented. Insane. Look at number 2, you guys, Dallas. Dallas is in pain. I'm going to tell you, I just got back from Dallas. Dallas is a mess. One part of the city is falling apart and abandoned. The other part of the city is nice. And it's like there's nothing in between. It's crazy. But Dallas is number 2, sitting at 2694. Atlanta, oh my gosh, that's crazy. Atlanta, Georgia, 1981. I also toured Atlanta, Georgia. Austin, Texas. Guys, Austin, Texas at number 4. I have also toured Austin. Look at Charlotte, number 5. Guess what? I've toured Charlotte as well. Charlotte is a swamp. It's pretty crazy. But 714, followed by Detroit, Kansas City, Columbus, Ohio. I would think Columbus, Ohio would have more. And then another Texas city with San Antonio at 587. The lowest one on this is Riverside, California. There's really not a lot of places to build in Riverside unless you kind of go into, you know, north towards Apple Valley and places like that. But Riverside sitting at 344. Number 2 from the bottom is Salt Lake City, sitting at 377. Now, when we look at what's just under construction, this changes. This actually changes quite significantly. So, except for the number 1. And what I want to point out first is these are expected completions from 2024 to 2026. And I want you to pay attention. These numbers are much higher than 2023. Because again, it's counting 2024 through 2026. Number 1 metro area, Phoenix, Arizona. Number 2 is Dallas, Texas at 6,481, followed by number 3, Houston. Now, I'm glad I see that because if I'm an investor and I want to invest in Houston, knowing that Houston is like full of investor-owned properties, I might be a little hesitant. And then also the property taxes. But my home metro, Houston, is number 3, sitting at 4,836. Huntsville, Alabama, sitting at number 4. I've also toured Huntsville. That's kind of crazy, right? Charlotte at number 5, Atlanta 6, San Antonio back up there, Austin, Jacksonville, and then a whole bunch of Florida. Salt Lake City is going to increase. Last city, though, on this list is Denver, Colorado. Now, as far as how long is this going to go on, look at this last little paragraph right here. We expect to see deceleration. It just isn't penciling now. We're seeing build-to-rent developers that are trying to sell a lot of communities to builders for the for-sale market because of challenges with higher cost debt. We see the market right now under a lot of pressure, but don't expect build-to-rent homes to go away. And they're not going to go away. But what we do know, and we covered this when we went out to San Antonio in our Metro Report video, is we found an American Homes to Build home that they couldn't rent. It was on the market, I think, for half a year, and they couldn't rent it out. So now they're trying to sell it, and they can't sell it. And so they've reduced the price on the house. Now, if they sell that house, American Homes to Rent, it's listed for under market. When that house sells for under market, they just doomed the entire subdivision because remember, the subdivision value is generally calculated by 3 comps, 3 homes that sold. So if one of those 3 or 2 of those 3 are forced selling or distressed sellings like American Home for Rent, then it's going to bring down the entire value of that subdivision. And you guys, this is not going away. So it's really, really important now more than ever that we are doing things differently than most of the population, because most of the population will be stuck renting, but we won't be because we are awake. And also these construction workers are awake, because when we look at new privately owned housing units under construction that are 5 units or more, so basically like, apartment complexes, 5 units or more, look at the historical surge. We've never had this type of home building. The home building right now for like renting and making money is insane, you guys. Look at that. It has been going down. If we look at the 5-year, it's been going down slightly, but we are still so far above pre-pandemic, so far. So they are still building like crazy. And if the market stops, if it goes into recession, that stuff is going to sit there and rot. We already see it happening and we haven't even hit recession. Now, here's the thing that sucks, you guys. New privately owned construction for SFRs. Now, unlike apartments or 5 units that are going down, SFRs are actually going up. That's great news, right? Right, guys? That's great news. Maybe. It depends how many of those are being built as build to own. But I do want to point out, guys, we are still way above pre-pandemic. So even though we're sitting at 689,000, that's a lot when we consider we were only at 522,000 right before the lockdown. So they are building, but not enough. Now, here's the thing, you guys, and here's why I'm saying it is the best time in America. There's never, ever been a better time to rent. But likewise, there's never been a more important time to rent with a purpose, increasing your purchasing power, understanding what's going on, because we see the greed, corruption, and fraud. And really, when we have the correction, depending on the market, we need to be able to get in, get the home of our dreams, and get out as quickly as possible without an investor coming in and sideswiping us with an all-cash deal, which again, I say, rent with a purpose. It's never been a better time to rent. But we also see that when looking at this. By now, everyone should have seen this. This is the gap of renting versus purchasing. Now, this is a little bit lagging data, you guys, but essentially it costs roughly, as of when this was done, about $1,845 to rent. To own is about $2,697. The gap between the two is massive. Now, prior to lockdowns, you see that it actually was cheaper to buy versus rent. And in these situations, you guys, not in every situation, but usually it's a slam dunk buying. I mean, seriously, think about it. If you can buy a house for less than what you're renting, and it's the same house, it's a comparable house, it's usually a slam dunk. But look at the gap. That reality is over. This was the sweet time right here. I'm circling the sweet time. But right now, it's over. They rug pulled us. And who rug pulled us? The Fed, corruption, fraud, greed, investors. Y'all see? Do y'all agree with me? Comment below. Seriously, do you agree with me? Do you agree with me on that, guys? Comment below. I want to know your feelings. Another article right here, guys. Rent or buy a house. The gap is narrowing for affordability in the U.S. Just want to read these paragraphs right here, guys. What percentage, of paycheck goes to rent? This is a scary statistic. Among 45 counties with populations of at least 1 million, the biggest gap between renting and owning is in Honolulu, where median rents consume 67% of average local wages, while typical single-family homes demand 135% of their paycheck. So to buy, they can't. It's more than their paycheck. That's just their mortgage. That's not even utilities. To rent, 67%. Imagine that, guys. I mean, how could you not feel trapped? How could you not give up? I mean, these people are giving up hope. And I hope that's not true, but I worry. Now, Oakland, California, 51% for renting, 51% of your paycheck, 108% for owning. So my point in saying that is even rent is high right now. You guys, we have a real problem going on in the US right now. And that problem is not us. Well, let me take that back. We have 2 problems. One of the problems is us. As consumers, we're doing a horrible job anticipating a recession. We're doing a horrible job at bringing balance back to the housing market because we continue to spend recklessly. And I'm going to say, guys, we have never been more at risk of becoming renters for the rest of our lives because it is so easy now to have bad spending habits. And so again, I say, yes, big problem, bad spending habits. A lot of us can increase our purchasing power from just that alone. But the second problem is look at what happened to the housing market. And this has been happening for quite some time. It just spiraled out of control when the Fed dropped rates. Who did that really help? Did the Fed dropping rates help us? Or did it really help investors? Did it really help the rich? Because that's what it looks like here. Now, I really want to know what you feel. What should be done? Should we turn the rent-to-owns into affordable housing? Can we? Wouldn't the government have to be involved and make things worse? But then what about the greed, corruption, and fraud? How do we get that under control? How do we help the people in Honolulu whose 67% of their income goes to paying rent? And a lot of them are natives. They don't want the tourism. The tourism's killing them. And so I plead to you, love some people, understand what's going on in your housing market, and make good decisions, great decisions moving forward. And be careful who you're listening to. Remember, people that are telling you to buy generally get filthy rich off of you doing so. Now, other than that, guys, if you're out there investing in real estate, you guys already know, I wish you luck and I hope you win.